I'm not really sure what's going on with the Seattle real estate market right now. Everyone seems to be saying something a little bit different. The national news is calling it a crash. Others are saying it's still hot. Well, what I do know is this: the market news is about as accurate as a Seattle weather forecast. So in times like this, I think it's best that we take a look at the numbers. But first, could you do me a favor? If you appreciate this straight to the point update, hit the like and subscribe button so you don't miss the next one. Thank you. Okay, let's start with the three key indicators that really tell the story. First up is sales activity intensity. In June, 44.6% of resale homes went pending within the first 30 days. That's down from 50.1% in May, but it still lands in what we'd call a very strong market. It's a small drop, nothing dramatic. Homes are still moving, just not quite as quickly as they were in the beginning of spring. So it's just not the race it was a few months ago, but it definitely has not stalled. Next is inventory, where we're up to 2.5 months of supply in Seattle. That's a solid increase from the 2.1% last month. This is the most inventory we've seen since the pandemic hit, and that's giving you buyers a little bit more to choose from. That said, a balanced market is usually about 3 to 4 months of inventory. So we are making progress, but we're still sitting in what we call low inventory. Now let's talk about these pesky interest rates. They're hovering around 6.95%, and that's a lot higher than the 3s and the 4s that we got used to, but people are still buying. The market isn't freezing, and buyers are adjusting. They're getting creative, and they're figuring out how to make it work. So those are the three big indicators. Now, let's take a look at a few more numbers to round out the picture. There were 2,006 new listings in June. That's the strongest listing month so far this year. We ended the month with about 2,917 active listings, and homes are taking on average 25 days to go pending, with about 12 showings before an offer is accepted. The average home is still selling for just over asking price at about 100.9% of list price, and the average closing price is holding steady at roughly $1.03 million, almost identical to last month. So what does all this mean? If you're a buyer, you've got more options now, but you still need to be prepared and ready to act, especially if you're looking under $1.25 million, because those homes are still moving pretty quickly. Make sure to ask your broker about getting you a 2-1 buy down on your interest rate. With more inventory comes a little bit more negotiation power for you buyers. If you're a seller, you still have the upper hand, barely, but pricing and presentation are more important than ever. The market is leaning toward balance, but we're not there yet. It's still competitive, just not as frantic as it was. Bottom line, the market isn't crashing, it's adjusting, and that's a normal part of the cycle. If you want to stay up to speed with what's actually happening, hit that subscribe button, and I'll see you next month. Thanks for watching.